Coming up on Business Daily, NNPCL halts 24 trillion naira fuel import buys from Dangote refinery. And Bitcoin soars past $80,000 barrier. Plus, we take a look at government spending as the budget deficit to GDP hits 7.5%. Many thanks for joining us. You're watching Business Daily on LN 24/7, where we take you around the world of business. My name is Amaka Daniels. We'll start off in the news where the Nigerian National Petroleum Company Limited has stopped importing refined petroleum products and is now off-taking from the Dangote Petroleum Refinery and other local refineries. NNPC's Group Chief Executive Officer, Mele Kyari, disclosed this on Monday at the conference of the Nigerian Association of Petroleum Explorationists held in Lagos. Now, this is coming at a time where some petroleum marketers insisted that they would import petroleum products and sell at a price lesser than that of the $20 billion refinery. Kyari also disclosed that the NNPC, as of today, is not importing any fuel as it now buys from local refineries. Speaking on domestic refining, he also said that there were several media stunts saying that the NNPC was now a saboteur of domestic refining by not willing to support domestic refineries. And moving on, the Small and Medium Enterprises Development Agency, SMEDEN, and economists say that the rise in Nigeria's public debt might create macroeconomic challenges, especially if the debt service burden continues to grow. They disclosed this on Monday while reacting to the national public debt figure of 134.3 trillion naira as of the second quarter of 2024, which was obtained from the Debt Management Office, with the National Bureau of Statistics putting the country's population as at the last count in 2022 at 216.7 million persons, comprising of 108.3 million for males and 108.4 million for females. It would mean that the debt per capita stands at 619,501 naira. Reacting to this development, the Director General of the Small and Medium Enterprises Development Agency, Charles Odi, stated that while the debt figure, which predates the current administration, looks high, reforms initiated by President Bola Tinubu have yielded positive results and are moving the nation towards stability. Odi explained that in just 17 months, the administration has reduced the debt service to revenue ratio from a staggering 97% to a more manageable 67%, which gives the government some breathing room and allows for increased spending on development, including support for small businesses. And the chairman of the Presidential Fiscal Policy and Tax Reform Committee, Taiwo Oyedele, says that Nigerians earning minimum wage or a little above it will be exempted from the pay-as-you-earn tax under the new tax reforms. President Bola Tinubu on September 3, 2024, transmitted 4 tax reform bills to the National Assembly for consideration, which stemmed from the recommendations of Oyedele's committee. Now, he was answering the 10 most frequently asked questions on the tax reform bills on his X platform when he said that the current taxable income bands and rates were introduced in 2011, but due to the lack of review, the structure has resulted in a fiscal drag where many low-income earners have been pushed to the top bracket over time due to high inflation. He also added that the new tax bill will eliminate all state consumption taxes except the value-added tax. I'll move on to our focus for today, where the federal government's budget deficit has risen to 7.5% of the country's gross domestic product as of August 2024, reflecting a significant widening of the gap between government revenue and expenditure. A member of the Central Bank of Nigeria Monetary Policy Committee, Muhammad Abdullahi, disclosed this in his personal statement at the 297th MPC meeting published on the website of the Central Bank of Nigeria. The CBN economic report revealed that Nigeria's fiscal deficit surged to 4.53 trillion naira in the second quarter of 2024, up from 3.88 trillion naira in the previous quarter. Abdullahi said that this development underscores the ongoing challenges the government faces in enhancing its revenue generation efforts. He said it also signals a greater reliance on borrowing to finance the growing expenditure, raising concerns about the long-term fiscal sustainability and the potential impacts on national debt levels. Now let's break it down. In simple terms, a fiscal deficit happens when a government's spending exceeds its revenue from taxes and other sources. It also means that the government is spending more money than it is bringing in. Joining me now to analyze this development and its likely implications on the economy is Mr. Aliyu Ilyas. He's an economist. Many thanks for joining us on the show, Mr. Aliyu.
All right, thank you for having me. Good afternoon to you.
Yeah, so what are some of the primary factors you would say have contributed to this increase in Nigeria's budget deficit to GDP ratio?
Right, our budget deficit is not something that is bad, but how to finance it is the problem. So when you talk about budget deficit, it simply means there's an obligation we need to meet. So most time we find surplus for Nigeria, but we find a problem that we are facing in Nigeria.
Okay, and what are some of the measures that the Nigerian government can take to reduce the budget deficit without compromising on essential services that need to be attended to?
Right, the major thing we should be concerned about our budget is that what of capital expenditure and debt services. We spend more on debt, that becomes a serious problem for Nigeria. And as it were now, we are actually paying for debt. As of now, our revenue don't meet up what we are realizing.
Hello, Mr. Ali, can you
We are
hear me?
spending more money compared to our revenue. And we are spending more money on debt. These are the challenges that we are having.
All right, Mr. Ali, can you hear me? I think we're having a bit of a network issue there. All right, so how you were saying something and we could hardly hear you. Can you just rephrase that answer?
Yes, so what I'm basically talking about is our debt services and major issue that we have. That we are having now. So if you look at Nigerian expenditure, so what we are spending is actually what we are making. So then whereby it must be equal or more than what we are spending until you correct this imbalance difficult to develop economy. If you look at now, we are planning for 2025. Our budget is also always deficit, which is not bad. But the thing now is that we use more money. But thanks to this present administration now, I think the debt service has now been reduced to.
Okay, so I'll ask one more question and confirm if you're still here. Would you say, what impact or what correlation would you say the Nigerian economy and this budget deficit, what relationship does it have with our current rising inflation, which is a problem that the Nigerian economy is currently facing? All right, I think we lost him there, and we'll go for a quick break, and when we return, we'll take more of this discussion and more stories from Nigeria and the rest of the world. Do stay tuned. Welcome back from that quick break. You're still watching Business Daily. And before we go back to that discussion, let's take some more stories for you. And Japan has expressed its commitment to enhancing trade relations with Nigeria following its participation at the recent Lagos International Trade Fair. The Managing Director and Trade Commissioner for the Japanese External Trade Organization, Tokashi Oku, in a statement, conveyed Japan's optimism for a stronger partnership between the two countries in future trade affairs. At the fair's closing ceremony, Oku highlighted the event's achievements while noting the lower than expected turnout this year due to Nigeria's economic climate. He also added that despite fewer visitors, Japanese companies still held productive business discussions and forged significant agreements with Nigerian firms. He also reflected on the potential for increased business engagement and expressed confidence in a better 2025 edition of the trade fair. Still talking about bilateral relations, China's imports from Nigeria increased by 36.1% between January and September as bilateral trades between the two countries reached $15.1 billion within the period. The acting consul general of China, Jin Mingyu, disclosed this in Lagos during a civic reception organized to welcome the arrival of the first vessel on COSCO's new route to dock at the Lekki port. He said the Chinese government hopes to see multinational enterprises working together to facilitate trade, build a modern port and logistics network in Nigeria, as well as share access to the vast Chinese market and realize the benefits of development. And it's good news for cryptocurrency investors as Bitcoin smashed through its $80,000 milestone late Sunday, reaching an all-time high of over $81,858 amid post-election optimism in the United States as pro-crypto policies appear more likely under President-elect Donald Trump. Early Monday, Bitcoin settled around $81,500, marking a nearly 18.5% increase over the past week, as reported by Forbes. Bitcoin climbed 6% on Sunday alone, lifting sentiment across the crypto market, with Ethereum, Dogecoin, and Solana all experiencing gains. Now, analysts suggest that a new regulatory landscape may be emerging as Republicans flipped the Senate and bolstered the House majority, fueling hopes for a more favorable environment for crypto. Trump's previous administration leaned heavily towards skepticism regarding digital currencies, but the president-elect has since embraced crypto, pledging to make the United States the crypto capital of the planet. And in Africa, the International Monetary Fund said on Monday that it reached a staff-level agreement for the fourth review of Zambia's loan program that would release about $185.5 million to Lusaka upon approval by the IMF's management and its executive board. Now, this agreement was announced after an IMF mission to Zambia from October 2 to 15, followed by subsequent discussions at IMF and World Bank annual meetings in Washington. The IMF said that Zambia's economy has been hit hard by drought, which reduced agricultural output and electricity shortages, impacting economic activity widely. The IMF also forecast Zambia's 2024 real GDP growth at 1.2%, down from a 2.3% forecast in June. Inflation also accelerated to 15.7% in October, driven by food prices and currency depreciation, well above a target band of 6 to 8%. And on the global scene, oil prices eased on Tuesday as investor disappointment over China's latest stimulus plan and oversupply concerns weighed on the market along a stronger dollar. Brent crude futures fell 17 cents to $71.66 a barrel, and U.S. West Texas Intermediate crude futures were at $67.84 a barrel, down 20 cents. Now, both contracts had fallen by more than 5% over the previous two trading sessions. While crude oil prices extended losses on a stronger U.S. dollar, concerns also emerged over demand in China. The market is now looking ahead of the release of monthly oil market reports from OPEC, the International Energy Agency, and the Energy Information Administration. Well, that's all we have packaged for you today on Business Daily. Don't forget to visit our social media handles and our content hub at www.ln247.news for further business news and updates. My name is Amaka Daniels. Many thanks for watching.